Monaco is one of the most exclusive and financially advantageous places to live in the world. A sovereign city-state located on the French Riviera, Monaco is globally recognized for its tax-friendly environment, elite population, and ultra-luxurious lifestyle. With no personal income tax for most residents and favorable rules for business owners, Monaco continues to attract high-net-worth individuals seeking both financial efficiency and European proximity. However, despite its reputation as a tax haven, there are still several taxes and residency considerations to understand before relocating. This guide outlines everything high-net-worth individuals should know about taxes in Monaco in 2025, from personal and corporate taxation to residency requirements, and the real costs of living in this high-profile enclave. Monaco does not impose personal income tax on its residents, with one major exception: zero personal income tax. Residents of Monaco, excluding French nationals, are not required to pay income tax, regardless of the amount or source of the income. French nationals. Due to a long-standing treaty, French citizens living in Monaco are still liable to French income tax unless they established residence prior to October 31, 1962, and have maintained it continuously. This unique feature makes Monaco highly attractive for wealthy individuals earning high levels of passive or active income from international sources. Monaco does not impose the following taxes on individuals. Wealth tax. Unlike neighboring France, Monaco has no net wealth tax on assets. Capital gains. Tax. Capital gains on the sale of personal investments are not taxed for individuals. Dividend and interest income. Investment income, including dividends and interest, is not taxed. Directors' fees. There is no tax on director remuneration earned from Monaco-based companies. This structure benefits individuals with complex investment portfolios, private holdings, and passive income streams. Contrary to popular belief, Monaco does levy corporate tax under specific conditions. Business profits. Tax. Companies earning more than 25% of their turnover outside Monaco are subject to corporate income tax. Tax rate. The standard corporate tax rate is 28% in 2025. Domestic revenue exemption. If at least 75% of a company's turnover is derived from within Monaco, it may be exempt from the business profits tax. This system allows businesses operating exclusively within Monaco to potentially avoid corporate taxation altogether, while ensuring that international businesses pay tax on non-Monaco revenues. IP revenue, income from licensing intellectual property, e.g., patents, copyrights, trademarks, is subject to tax regardless of where the IP is exploited. Owners and directors often reduce corporate tax exposure by drawing high salaries, which are not subject to personal income tax, thereby lowering taxable profits. VAT. Standard. VAT. 20% reduced rate. 5.5% on specific goods and services. Monaco follows the French VAT system under a customs union with France. VAT applies to most consumer purchases and professional services, and it is an indirect cost of living and doing business in Monaco. Stamp duties are applicable on a variety of legal and commercial documents. Rental agreements. 1% stamp duty based on annual rent, including maintenance fees. Mortgaged property purchases. 3% of the mortgage amount. Sale of real estate. 4.55% if sold to individuals. 6.5% if the property is held within a company. Movable assets, e.g. Jiwadin artworks. 5% standard duty or 2% for public auction sales. Business sale. 7.5% stamp duty on the sale value of the business. These transaction-based levies can represent substantial costs in real estate and business transfers, especially at high values. Monaco does not apply a universal inheritance tax, but imposes transfer tax depending on the beneficiary's relationship to the deceased. Spouse, children, 0%, siblings, 8%, uncles, aunts, nieces, nephews, 10%, distant relatives, 13%, unrelated individuals, 16%. This tax only applies to assets located within Monaco and is not levied on worldwide estates. The structure strongly favors direct heirs while still taxing wealth transfers to extended or non-family beneficiaries. There is no annual property tax in Monaco. However, due to high demand and limited space, property prices are among the highest in the world. Average price, 2024. Approximately 51,967 euros per square meter. Rental prices, 2,800 euros per month for a studio to 25,000 euros per month for a 3-bedroom unit. Although there is no ongoing property tax, transaction costs, via stamp duties, and the actual purchase price make real estate acquisition a significant financial commitment. Each alternative has its own cost structure, lifestyle, and regulatory considerations, but may offer more flexibility or affordability depending on personal circumstances. Individuals considering Monaco should plan carefully, ensure compliance with residency thresholds, and work with professionals to manage banking, real estate, and legal structuring. The rewards are significant, but so is the complexity.